Okay, so now we'll just calculate the cash received from accounts receivable. So we've got 82,000 plus 790,000 minus 8,000 minus 12,000 for our bad debts, minus 16,000 for our discount allowed, minus our closing accounts receivable, giving us a total of 771,000. Right, now we'll just do our cash paid to accounts payable. Okay, so these are just our two calculations, and as always, the more you do of these, the more it'll sit in on what you need to do. So we're going to start with our opening accounts payable. So we'll just go up on our information, and it's 55,000. We're going to add in any credit purchases, so these are going to be any invoices that have been received from our suppliers of 500,000. And then we've got minus any credit purchase returns. So remember, these are credit notes. So we're going to take out our credit notes. So our credit notes are received 3,000. Okay, we're going to add in any freight, but in this case we don't have any freight. And we're going to take away any discount received. So just check if we've got any discount received. No, we haven't got any discount received, but now we're going to take away our 70,000 for our closing accounts payable. And it's kind of handy to write those ones in even if you don't need them, because it just means that you remember it when you come to the exam. Right, so now we can calculate it. And remember to do it a couple of times just to make sure you got it right. So we've got our opening accounts payable plus our credit purchases of 500,000 minus our purchases returns of 3,000 and minus our closing of 70,000. And we should get 482,000. I'm just going to do that again to make sure I've got it right. So, yeah, right. So now we're ready to do our cash flow statement, and we're just going to start. So we need to put in all our receipts first. So I'm going to put in all our receipts, and we'll start with cash received from accounts receivable, so we don't forget it. Okay, 771,000. Okay, we're going to look for any other cash receipts. So we've got cash sales of 400,000. We've got Marcus took out a 45,000 business loan for Office World. So that is more money that's come into our business. So we're going to include that. So we've got a loan, a new loan of 45,000. We've got gain on a sale of delivery vans non-cash. Direct debits for insurance totaled 5,000, and we know that that's a cash payment. Direct credits for interest on a term deposit, that's a cash receipt, so that's going to be 2,000. So interest term deposit is 2,000. So remember, in the exam, the more you get in, the better, because you will get more, so the more lines you get correct, the higher your grade. So then we'll work out total receipts. Now, and if we were given just a account, trial balance, we'd find expenses are cash payments and our incomes are cash receipts, okay? So we would work out our total receipts. So we could look on that on the credit side and just check if there's any others there. Plus 400,000, plus 45,000, plus 2,000. So we've got 1,218,000. Right, now we're going to do all our payments. And the first one, so we don't forget, is our cash paid to our suppliers or to accounts payable. Either is correct. And that's going to be the figure we calculated, which is 482,000. Okay, and then we're going to look for any cash payments that we've made. Okay, so as you go, it always pays to write in. So what we notice is that we've got the insurance of 5,000. Okay. Got advertising of 30,000. Okay. Office wages of 85,000. Now, our drawings is a bit of a funny one. We don't know, because we weren't given any extra information about whether they are cash or not. We'll just, looking at the nature of the business, he's a supplier of office equipment. I think we can safely assume that drawings will be cash, so we'll put drawings in. Usually they'll let you know. Okay, so that's 50,000. Okay, so they'll usually tell you whether the drawings is cash or not. Okay, so it's all about what is cash. Okay, so now we can work out our total payments. And then we'll be able to work out our net increase or decrease in cash. Okay, so let's total up our cash paid. So we've got 482,000 plus 5,000 plus 30,000 plus 85,000 plus 50,000. So got 1,169,000. I'm just going to double check that. Oops, let's try that again. 482,000 plus 5,000 plus 30,000 plus 85,000 plus 50,000. Yep, 652,000. And we're just going to check our total receipts, because I didn't do that last time. 771. Oops, 771 plus 400 plus 45 plus 2. Okay, then we're going to take away and we'll get our net cash increase, and this time it's a net cash increase, and we would do cross out that, and then of course we'll bring in our opening bank balance and add it on, and our close, and that will give us our closing bank balance. Okay, so you're going to find the opening bank balance, and in this case it's 20,000, and so